Hi, I'm Victoria, and I am really happy to have Ramez Fahmy with me today. He is a mortgage lender with 28 years of experience in the business, branch manager with Caliber Home Loans, and he is based in Maryland. Ramez, thank you so much for joining me today on Listen Up Homebuyers.
Good morning, Vic. How are you today?
I'm really good. And I'm excited to talk to you today, April 25th, 2022, because just over the weekend, we have seen a jump in interest rates. And all the people that I'm working with, and I only work with buyers, are kind of shaking in their boots a little bit. Can you tell us what you see happening in the housing market right now?
Yeah, so this is, I would say, the first time since the early 90s that we've seen rates move up as quickly as they have. If you think back to the third quarter or fourth quarter of last year, we were staring at interest rates in the twos, and now we've quickly made our way into the 5% range and probably headed maybe more towards 6. If you look at rates, though, on a historical basis, these rates are still historically low, but not what we've been used to seeing. The lower rates came as a result of a lot of sort of like government infusion of capital to keep the economy going during the times of the pandemic, which has ultimately sort of fueled a little bit of inflation. We're seeing inflation at its highest rates since the early 90s, 1994, which is pretty much the year that I had started in the mortgage business.
Yeah.
So I've seen this before.
Yeah. And so since you have so many years, 28 years of experience, you've also seen, and experienced the bubbles and crashes. Is that where we are right now?
Well, I think this, perceived bubble that we may be having is very different than what we saw in 2008 when there was a lot of sort of different types of called exotic financing out there where clients weren't quite as, you didn't have to get as much documentation out of them, that sort of thing. Every single client that's being worked with today has been fully vetted. So the quality of your client and their financial stability is much higher than it was, 14 years ago.
Right. And there are more protections in place too for the buyers. Unlike when we had like in the movie, The Big Short, when we had that's a great movie to kind of lay it out. And, did you
fantastic.
like it?
I loved it. It was funny. I was talking to some friends yesterday about those two guys in Florida who were bartenders and, kind of there in and out. And you probably have still a little bit of that today. And this move up in rates kind of helps flush those folks out of the system, which I think is great for everybody.
I do too. Yeah. So again, because I'm an exclusive buyer broker and I work with buyers, several buyers are now modifying or talking about modifying their price range because of this interest rate hike, and they're saying, maybe I need to drop down to a lower price. What are you telling home buyers when they're calling you? What is your advice to them?
Yeah. Well, first of all, we talk about the Fed and them moving rates up. The market has done the work of the Fed here for the first, quarter of the year to try and curb inflation. We just had, consumer price index came out at its highest level, like I said, since the early 90s, which is kind of those inflationary signs. Yeah. So we've seen mortgage rates move up ahead of sort of the Fed, touching rates. They've moved rates. They've had 1/4 point hike. We've got monthly meetings coming up each of the next 3 months, and the Fed is very hawkish, which meaning they're like really trying to kind of curb inflation. Mm-hmm. We'll start to see 1/2 point increases, but that's not going to necessarily translate into, hey, mortgage rates are going to be 0.5% higher every time. Much of that has already kind of been priced into the market. So like I do with every client, whether rates were 2.5 or whether they're 5.5, we talk to clients about what they're comfortable with qualifying, not necessarily what do they qualify for. Mm-hmm. And we start to ask them, what are you comfortable paying a month? Of the money that you have in your bank accounts, how much of it do you have set aside for buying a house versus saying, I've got carte blanche to use every penny and take you all the way up to the upper limit. And then we give them their comfort level. And then from there we say, hey, for every $1,000 up or down in price, you can expect the payment will be $6 higher a month. So that way you're kind of giving them some sort of, some guardrails to work with.
Okay. Can you repeat that one more time? Because I think that is really important to hear.
Yeah, yeah. So what you qualify for isn't necessarily what you're comfortable paying.
Right.
And once again, one of the things that I've told people over the years, you don't want to be resentful of the house that you buy because you bought that house, you're stuck with this payment for,
right.
presumably 30 years. Obviously, there's a lot of opportunities along the way to sort of refinance and, restructure your financing. But nevertheless, stay in your comfort zone, and if you're going to come out of it, like if you're getting a raise later in the year, or, you're early in your career and you have this upward trajectory of income, then maybe you can buy a bit higher.
Right.
But if you're heading into sort of maybe retirement age and you're going to be on a fixed income, you have to, don't bite off more than you can chew, I guess, probably the best way to describe
that's a really good way of putting it.
Yeah.
Right. And, because we are seeing multiple offers on virtually every house or condo or row house that we write on, sometimes people can get caught up in that frenzy. And I feel like it's my job to make sure that they don't get too caught up and overextend. We have something called the escalation clause, where there's a factor and there's a cap. And so, you say, I am going to beat every other offer by, for example, $2,000 or $5,000 up to my cap of $1.5 million or whatever. And when that starts happening and it gets really competitive, people can sometimes kind of lose their head with all of that. So I think part of my job is making sure that they don't, again, not just regret what their mortgage would be, but regret the person, who's helping them and advising them as an agent,
Yeah, sure. Yeah. I mean, it seems sometimes there's this sort of like feeding frenzy after these houses. There's a bit of the term that everyone uses today is like FOMO, fear of missing out. Like, well, I have to get a house. I've got to get it now. Yeah. There's this herd mentality. And like you said, your job and my job are to basically let people know, hey, if you're going to do this, these are your risks. Right. And I think what we do is we're seeing multiple offers. We're seeing waiving of contingencies, whether it be appraisal contingencies, finance contingencies. As a lender, my job is to say, okay, one is I need to prepare you so that you are comfortable waiving that financing. Basically, you are going to get a loan, right? We ask borrowers for everything up front as if they've already written a contract, and we kind of fully vet them to know that, yeah, you're going to get a loan. So the next piece is, the appraisal, right? So if you're going to waive your appraisal contingency, what that means is you're willing to buy this house regardless of what it appraises for. And then what does that mean to you? Does that mean more money out of pocket, right? A lot of times that's the case. Other options people can have is, let's say you have someone who's putting 20% down, or their intention is to put 20% down, and then they waive a contingency, right? And now that appraisal comes in $15,000 low.
Right.
Does that mean, do I have to come up with another $15,000? Not necessarily. You can do it because the way a lender will lend to you is they'll base it on the lesser of the appraised value or the sales price.
Mm-hmm.
So if you come in 15,000 short, maybe you don't have that extra $15,000, or you'd prefer not to come up with that 15,000. And now we're looking at, let's say it's an 85% loan to value versus an 80% loan to value. And now we have a mortgage insurance component, right? Well, maybe the mortgage insurance only adds $30 or $40 a month to the payment, and it's $30 or $40 a month more important to you than $15,000 out of pocket to potentially make repairs and things. And if we believe that values are continuing to rise, which they seem to kind of have been doing, you might be in a position in a year from now or 2 years from now to drop that PMI. So like I said, we just need to be very methodical in giving you the information that you need, so that you're not making a decision and then finding out later that, oh my God, I can't do this, and now you've got a $20,000 or $30,000 deposit at risk.
Right. Yeah. And
Yeah.
you mentioned a lot of, there's a lot packed into what you just said. One of the most
Yeah.
important pieces is that if you're financing a property, the appraiser is going to come out independent and evaluate the value of that property. And the lender is only going to give you what the appraised value is. So that's something to keep in mind, just to be clear. And another thing that you bring up, Ramez, that I think is so important, everything that you're saying involves teamwork. And when I meet with new buyers and we're having a consultation, I often say I am a part of your team. I'm the part that's going to be doing a lot of the running around and evaluating properties and kind of working on that piece of it. But your job is a huge component in that. There are all the deadlines and the contracts that have to be met. If they're not met, that buyer can be in default. And I really stress to buyers the importance of finding somebody who is going to pick up the phone and or email you and answer your questions as a buyer, because that's critical. That's as important as the person who's out there, evaluating properties with you. Can you touch on that a little bit?
Yeah, so obviously there's a tremendous amount of technology out there these days. I mean, when I started back in 1994, everything was handwritten. I'm dating myself here, but we use, what we say is, we are at the company that I work for, Caliber. We say we are high tech and we're high touch, meaning you can reach us virtually 7 days a week to get your questions answered. I spend much of my weekend time fielding calls from realtors and buyers about contracts that they want to write on homes. Mm-hmm. They want to see numbers. I know there is a convenience of going online and trying to shop for interest rates and, seeing the big companies out there. I'm not going to call them out, but many of those companies are most suited for handling refinance loans.
Right.
Don't really involve deadlines and that sort of thing, because like we talk about sales price escalations, that's important. Appraisal waivers, or waiving the appraisal contingency, waiving the finance contingencies. Another big sort of component is, how quickly can you get to closing?
Yeah.
Right. So while we have relationships with real estate agents, and look, by law, there's no money going back and forth between these referrals. An agent will refer business to us because they know we'll do a good job.
That's right.
Pick up the phone and we help facilitate these transactions. We do more than just kind of loans. We do a lot of advisory work with clients leading up to the point where they're buying a house. And then once they're under contract, our job is to kind of get that loan approved as quickly as possible, with as least effort as possible from the borrower. As I tell people, my full-time job is to get you a loan. Your full-time job is not to sort of be getting me everything that I need. So if I ask you for everything up front, I shouldn't have to ask you for a whole lot once the transaction is underway.
Right. And communication, like with everything, but communication is really key. I tell people when I'm working with them, because frequently they'll want to shop and they'll want an online person, or some other company that isn't maybe in the local area, and they'll say, "Hey, I called them on Friday. I didn't hear back from them, and it's Sunday, or I if they're not communicating with you now, there are going to be problems or potential problems down the road. So really, it's kind of basic. They should be getting back to you, whoever you work with.
Yeah. And I think what's super important too, I don't mean to interrupt, but
no,
with listing agents, so so you as a buyer's agent are representing the buyer. The listing agent is representing the seller. We get calls, like I say, in evenings, weekends, from listing agents, because many times that's when they're able to sort of like present contracts to their sellers and say, "Hey, I have multiple offers here. Let's go ahead and call these lenders and see, they can tell us the good and the bad of the transaction." Well, a lot of these sort of credit unions, online lenders, these folks are working normal business banking hours, maybe 8:30 to 4:30 or 5 o'clock. Monday through Friday. And much of the work that we do is on the evenings and the weekends, right? And so we've seen on many occasions where someone gets a contract accepted for potentially not the highest terms possible, because the listing agent felt most comfortable with the local lender. In this case would be me, hopefully. But generally, being able to communicate with these folks and having a good reputation in your marketplace is a huge factor.
Exactly.
And buyers don't necessarily recognize that. They think, oh, it's just only about the interest rate. Well,
Right.
that's not always just the case.
Yeah, I know. I'm doing it every single day, so I know exactly what you're talking about. Before I let you go, because I know you're busy, can
Sure.
we just talk briefly about VA loans here in the Washington D.C. Baltimore area? And that includes Northern Virginia, Maryland, and D.C. the district. We have a lot of people who are veterans or active military, and they're using the VA loan. And it's a product that is really attractive because sometimes it's zero down. But there are some drawbacks, and particularly when you're competing for a property with somebody who might have a conventional loan. Can you just touch a little bit on that?
Yeah. So what a lot of people don't know about VA financing is, one, first of all, in the most recent year or two, they've made some changes to what their maximum loan amount is. VA does not have a maximum loan amount. So I can do a VA loan for, in most cases, this would be a retired veteran, like $2.5 million with no money down. And to what I tell people is that's a good thing, right? Because if you have a borrower who can do both VA and conventional and qualify both, and if they're going to basically kind of willing to make up a shortfall in an appraised value, they can use that extra money that they were going to use for their down payment to potentially make that shortfall.
Right.
I would say that the negative connotation associated with a VA loan that sometimes comes into place is, one, is the bigger lenders out there who are doing the VA loans are more your call centers, your credit unions, that basically are marketing themselves to only VA clients. Once again, those are call center type lenders. They can tend to take a little bit longer time. But if you have a good lender who's local, who does VA loans, who really understands the product, it's fantastic. The other sort of like maybe drawback that sometimes people talk about with VA loans is the VA appraisers, right? So the way it works is, on a normal conventional loan or an FHA loan, a lender will use their own panel of appraisals or an appraisal management company to manage that process. The local lender panels are much more effective than appraisal management companies. But with VA, they have their own panel of appraisals, right? And they basically have given them guidelines as to sort of, you have this much time to get this appraisal back. Maybe it's 10 business days or 15 business days. And they're telling the lender, don't even call the appraiser until that window of time has expired if it's not in. But what we are finding is a lot of these appraisals are coming in the same amount of time. They're coming in quickly. The values are the same because the appraisals, they're using the same comparable sales. The only kind of one or two things that might come up on occasion is the handrail needs to be replaced.
That's right.
But what people don't know is, if a buyer wants to pay for that handrail themselves to get replaced ahead of time, they can do so. Right. So I would try to change the hearts and minds of listing agents to really kind of consider this type of financing, right? These veterans have done a lot for our country. They're rewarded with this type of financing availability. Additionally, many of our veterans who are getting out today have had some injury or something during their time of service. So they're getting some bit of VA entitlement or disability pay. And one of the bigger expenses associated with a VA loan is called the VA funding fee, right? That VA funding fee can be as high as 3.6% of the sales price, which can be financed. But if you have any percentage of VA disability, that expense is completely waived. So now you're looking at an interest rate that in most cases for the last 10 years has been lower than conventional interest rates, right? So you're getting better terms. You're potentially not having to pay any PMI, and you don't have to put any money down. It's the greatest deal in the world for the veteran. But many of the the sellers, and it's not really the sellers. I think it's many times their agents who are saying,
Right.
"Oh no, we don't want to maybe do this type of financing." So
Right. Yeah.
I think sometimes it takes me getting on the phone with an agent to explain to them, hey, listen, you may have had bad experiences and this is why, but this is why I think it's different if you use someone who knows what they're doing.
Exactly. And I think it is important to know a lot of it is that the VA appraiser might have a lender required repair, but we do a lot of VA loans and rarely come across this. So, thank you for saying what you just said. I hope listing agents listen up and really pay attention to that because, we will continue working with veterans and it's important that that everybody understands. It kind of takes the sting out of the difference between conventional and VA.
Oh yeah. I think once again, it's all about communication and education of whether it be the buyers, the sellers, the agents, and and a call like this and the service that you're providing, and doing these podcasts and trying to educate people about everything is so important, and everyone needs to just do their part.
Yeah, thank you.
Yeah.
Well, Ramez Fahmy, mortgage lender with 28 years of experience. He's a branch manager with Caliber Home Loans. He is based in Maryland, but he serves buyers in many states. Thank you so much for joining me on Listen Up Homebuyers.
Thank you so much for having me today.